Hello and welcome back to Southbank Live. After a week's hiatus, we are back with another episode, here to discuss the most pressing moves in markets over the past week. My name is Boaz Shoshan, and I'm joined as ever by John Butler. John, how are you getting on this week?
Yes, very well. How about you?
Very well indeed. I'm currently in Liverpool at the moment.
No?
Hopefully, the streets outside don't get too rowdy this evening, as they are prone to do on a Thursday or even every day of the week. I've discovered. I've not actually been to Liverpool before. This is my first experience here, and it has been very interesting. But we do have plenty to discuss, John. It has been quite a week, and of course, for everybody watching, thank you all for joining us this evening. We are enjoying these sort of evening time slots. They're nice and relaxing, and of course, we get lots and lots of audience engagement, which is great. So if you have any questions or if you have any feedback you'd like to give us, please just leave it in the live chat box on the side. And of course, if you do like these, do feel free to subscribe, or to like the video, because that really does help us out. Now, in terms of the market over the past week, it has been very interesting as ever, John. I thought we could kick off with the Shell debacle, as it would be for the Dutch, or maybe the Shell victory for us here in the UK. Very interesting story, and I think it definitely goes against a lot of the Brexit, the anti-Brexit narrative about how once Brexit happens, all these big companies are going to flee from our shores. They're all going to go to Frankfurt and Paris and things like that. And here we have the fifth largest company in the world, which of course has always had an Anglo connection ever since it was incorporated, I believe in 1907. But now Shell is going fully incorporated in the UK, which is a very interesting move. What are your thoughts on that, John?
Well, I mean, look, this is not strictly about Brexit. You need to step back a little bit, and you have to consider the way in which Anglo-Dutch Shell was set up as a company with two domiciles, effectively, the same way Unilever was for many years.
Right.
And the thing, though, is that when you're a publicly listed company and you pay dividends and you're in a jurisdiction domicile that has a withholding tax on dividends, now that won't affect domestic investors at all, that is within your home jurisdiction, but it might affect international investors who might not want to pay the withholding tax or not receive the full dividend because of the withholding tax and have to go through some process to claim it back as a foreign investor. And it complicates the way in which you structure your share classes and your ownership. And so Anglo-Dutch has multiple share classes. There are those from which dividends are withheld and those from which dividends are not withheld. And it's simply a more expensive way to govern a business, right? To have it set up. And so given that Brexit has occurred, it kind of almost gives them an excuse. It's not as if they couldn't have made a decision before to fully domicile in the UK, but it almost gives them an excuse to review their corporate domicile. And they've chosen to go with the simpler structure, which is only available to them if they completely domicile in the UK, which is to have no withholding tax on dividends in any of their share classes. And so from the perspective of the international investor, that makes Royal Dutch Shell a simpler company in which to invest. There's not this potential complication of dealing with the withholding tax at source. And so, again, it's only indirectly Brexit related, but in the same way that Unilever has decided to retain its UK presence, here you have, Royal Dutch Shell choosing to actually, they're going to drop the Dutch part of their name as a result of this. Anyway, it's about simplification, which at the margin, and I stress at the margin, there's not too much in it, simplifies corporate governance and simplifies the ability of international investors, regardless of domicile, to hold the stock without any additional bureaucratic nonsense, red tape to deal with.
Right. Thinking of that, when you think of if you didn't know what dividend withholding tax was, and maybe you could expand on that for those of us who aren't massively into the taxation side of the investment and financial world, John. But is this is this a straw that breaks the camel's back, or is dividend withholding tax just the one big issue that has finally pushed Shell out of the Netherlands?
Well, again, that's kind of what I'm getting at. It in of itself, it's actually not that big a deal. However, other factors equal, it does allow for a simplified corporate structure. It does make it easier for international investors, be they institutional or private, regardless of their own domicile. It makes it easier for them to invest in the company. And so the UK, I mean, the UK made this decision a long time ago, way back in the 70s. The UK decided that it wanted to be what is effectively an offshore financial center. They don't call it that, but it kind of is. And they removed all withholding taxes on dividends as well as coupon payments on bonds. And this, of course, enables the creation of the euro market. So corporations can also issue bonds listed in London, denominated in any currency, that do not have any withholding tax on their bond coupons. And that really supercharged the City of London's future vis-a-vis continental Europe, which to this day, it's not just the Netherlands, right? But basically all countries have some form of withholding tax on dividends, and therefore are not places in which international firms, multinational firms, choose to list normally on their exchanges unless they are themselves domestic multinationals.
It's a very nuanced topic when you think of it like in those terms, John. Thinking of it from a governmental perspective, there was an effort from the Dutch government last minute to try and stop this from happening, right? To get an amendment to the dividend withholding tax bill, as it were, in order to keep Royal Dutch Shell. And this makes for terrible optics, right? You are the government that lost Shell, and you can't even claim to be oblivious to it because you did make a last-minute attempt to try and save it. I mean, what's the thinking behind dividend withholding tax in the first place, other than just a source of government revenue? And how do you think things got to this point where the Netherlands lost what is something of a crown corporate jewel?
Yeah, well, keep in mind, I mean, look, I don't want to downplay the size of Royal Dutch Shell. It's one of the largest corporations in the world, but it's also just one corporation. I mean, there is more to the Dutch economy than Royal Dutch Shell being listed there, seeing as how very few of their actual activities are there, with the exception of the refineries at Rotterdam, which are amongst the largest in Europe, I believe. But in any event, the fact is, governments like withholding taxes because they are very low cost to administer. You know the source of the tax, in this case, the company paying the dividend, and you collect the tax at source, one source, rather than trying to then collect it from investors, of which there might be millions potentially on the other side of receiving that dividend and saying, okay, you need to now pay tax on it. From a central government administration point of view, withholding taxes seem easy. They seem easy to administer, cheap to administer. So they naturally gravitate towards it. But, and it's a big but, if you are trying to attract international investors who might be domiciled in countries where there is no tax on dividends and have a tax treaty with the Netherlands where in theory they can claim the withholding back so that there is tax equalization, then they don't like that. They don't want to have to jump through that hoop. So anyway, I think the Dutch government realized too little too late the importance of the international investor to Shell, which seems a bit odd given that this is one of the most international companies in the world and has been for an awfully long time.
Yeah, I wouldn't want to be a member of the Dutch Treasury right now. I think it would, it must be pretty hard to live that down, being the government that lost Royal Dutch Shell to the Brits after all. I was wondering, John, if you think this reflects what this says about the City of London. So the City of London is already sort of the commodity capital of the world in many respects. This is where very large mining companies, very large oil drilling companies go for a big listing. These are sort of the Premier League of finance for commodity extracting companies. So the smaller companies, the more speculative type, they're often listed over in Australia or in Canada. But once you've graduated, you're one of the big boys, you'll probably go to London. You might even set up your headquarters there, and that's where all the executives end up living. And it's very good for the UK in general to have all of that here. And I think it is, this is another reinforcement of the commodity capital status there. Looking how Britain is positioned right now with all of those companies over here, obviously a lot of the commodity extraction is going on all over the world. But in terms of how this sets Britain up in an inflationary environment where commodities are generally going up, do you think this is going to be good for our future, that we have this this resource of having all of these resource extracting companies at our doorstep?
It potentially could be. Now keep in mind, as I just mentioned about the Netherlands, the bulk of the activities of these companies, the value-added activities, take place elsewhere around the world where the resources are located, right? The resources are barely at all located in the UK itself. And so, of course, there are going to be domestic tax liabilities to pay in a lot of those regions, including the mineral rights that are associated with that, et cetera, et cetera. However, as you say, other factors equal, the City of London has a long, long history of making itself a very attractive place to do certain kinds of business, in particular finance, and in particular capital raising, which of course is facilitated by having a public listing on a major stock market. And so there is this legacy, sort of, as it were, position that the city has of these large multinationals being listed here, even if the vast bulk of their operations might be elsewhere. It is a very friendly jurisdiction for capital raising. And as we just discussed, it simplifies the payment of dividends around the world because there's no withholding tax. And yes, to some extent, that does result in executives choosing to reside here. That said, many of them reside only part-time, which is for an entirely different set of tax reasons, because residency in the UK as an individual, as a household, is not particularly attractive, especially now that the tax rate in the UK on individuals and households has reached a historic high. But that's a different issue when it comes to attracting certain corporate activities, in particular financing and capital raising generally. Yes, it's much more attractive than the EU for the most part, again, with the notable exception that if you are a German company or a French company, at that point, you kind of have to stay at home because you're not going to be able to conduct your domestic business in the way that you currently do if you choose to move out. And in fact, it's extremely disruptive if you have major domestic operations to
Yep.
try to leave town to benefit. And of course, it doesn't go over well politically either, right?
Not at all. Not at all. Yeah, that looks very bad if you're
Right.
fleeing the country generally for tax reasons. It's not going to go down well with all your loyal customers back at home who supported you, etc., etc. On that note, John, I thought we could turn to the chat because we do have a few questions on this topic. It is great to see all the people online at the moment watching this show. Thank you all for joining us. I thought we could start off with a question which relates to what we've been talking about here. This is from Imran, who came right out the gate with this question, which is on the topic of, we're talking about green energy and the green revolution. So related to energy extraction, things like that. Imran asks, what would the green revolution do for countries in Africa and the Caribbean, etc.? So emerging markets, what good is a third of the world going green when the other 2/3 is full of smog? Well, thank you for that question, Imran. That's it's a very good question, really. One does wonder what use is it if all of Scandinavia is driving around in electric vehicles and everyone's feeling very good about themselves for saving the planet. Meanwhile, the rapidly growing middle class in India is just burning diesel like we all do here at the moment. What would be your take on that, John? Because we have discussed green a lot, and you're quite skeptical. You're really quite realistic, I would say, about the potential for green technologies in general. How would you respond to Imran?
Well, I would say that for all the potential benefits of green power, as it stands today, from a practical point of view, it is not only expensive, but it is also very impractical to provide the sort of base power that provides for basic electrical coverage of a grid, as well as a major manufacturing operation that needs to run more or less 24/7, as efficient factories tend to do. And so, if you live in one of these less developed countries that is still very dependent on manufacturing jobs, basic industries, resource extraction, and whatnot, you really just don't yet have the option of relying on green power if you want to provide the sorts of jobs that are associated with those activities, because those activities will simply be just prohibitively costly. And you won't be able to provide jobs to domestic workers if you're not competitive. And that's the trade-off. If you want the jobs, you still need to rely on fossil fuels. There just isn't another option, viable option currently for these countries. Now, someday that may change. Someday green tech may evolve to the point where it can reliably provide cheap base power. And if it gets to that point, then the developing world will benefit from that with less pollution. But we're nowhere near that yet. So if you want the jobs, you simply have to accept the pollution. And I know that doesn't sound like a nice trade-off, but that is the reality, as Boaz mentioned.
And arguably, who are you to say? Who are we to say in our plush developed world? No. You guys aren't allowed to prosper and get rich and live
Right.
live better lives because no. The planet's getting warmer, etc., etc. I think it's very. I think it's unavoidable to a large degree if a country actually wants to develop and get higher living standards. If there is cheap green technology that can allow them to do that, then great. But if there isn't, well, they're just going to have to burn diesel and all the other dirty things that we shun these days. One wonders, what would Greta Thunberg say to a farmer in rural India who is driving around on in a small diesel powered van or something like that in order to move goods around,
Well,
and it's obviously very hot. Electric vehicles probably aren't going to do that well. They're not going to have charging stations.
Let them eat, bhajis comes to mind, right? I mean, it really, I mean, it's again, look, I mean, Greta may make a passionate case, but she clearly is out of touch with life on the ground in India and other developing countries who desperately need cheap power to advance from their current, in many cases, subsistence level of existence. So there's a bit of Maria Antoinette about this.
Yeah, I would certainly agree. In fact, I'd say that about a lot of the COP26 event that we have seen, though Greta is obviously the great figurehead of it. But we shall move on slightly. Thank you for the further questions. We shall carry on with those. Have seen a couple about crypto and things like that. We shall get to those later. The Bitcoin gold dilemma or Bitcoin gold question, I think we can come to later on in the show. Right now, there is another question relating to energy. It's the great petropolitics or gas politics, though it didn't sound quite as nice. Sort of the gas crisis that we've got at the moment. There's another level of intrigue going on, another level of tension that we've seen take place. There's a headline I'd like to show, actually. I think this one came from Dividend. Let's see if I can bring it up. Here we are. German agency suspends certification for Nordstream 2 pipeline. So this is the great gas pipeline connecting Europe effectively and Russia. It has been, someone's pulled the plug on it at the last minute to some degree, or at least temporarily pulled the plug on it. There was another quote I'd like to include here. This one comes from the FT. It's a very interesting, quite a bleak observation, actually, on the state of the gas crisis in Europe. This is from James Waddle. This is from an article in the FT saying, any remaining hopes that this pipeline would be available for the winter are completely dashed now. Increasingly, it's looking like it may not start up until the second half of next year. The lack of gas in storage and the lack of Russian supplies mean we essentially have to cut into industrial demand in order to preserve crucial gas supplies for the power and heat networks. Europe is having to heavily reduce industrial gas demand in a way we haven't seen in decades. So, there is the potential that Russia may decide to, funnel some gas through to Europe via Ukrainian pipeline if Putin would be so kind. But he doesn't want that. He wants Nord Stream 2 to go ahead. So he's probably not going to do that. Yeah, if we can just we can probably move that slide to the side. John, you pay a very close attention to this entire debacle, especially from the German side. What do you think's going on here?
Well, I mean, I did live in Germany for years. And in fact, I was living in Germany when Gerhard Schröder, the former chancellor, went to work for Gazprom. And he has been involved also in the Nord Stream 2 project earlier on. And this has been going on a long time. The fact is that there's a long-term trend as we know, of not just Germany, but much of Europe becoming ever more dependent on Russian gas exports. However, historically, the bulk of those exports have gone through the network that existed in Ukraine. And the disputes that have occurred over Ukraine in recent years, which have become very, very acute since 2014 or so, uh, are basically the entire Nord Stream 2 project was kind of a response to that. It was a way for Russia and Germany to be able to trade gas directly without relying on Ukraine as a potentially unreliable partner. And when I mean unreliable, I mean unreliable from the Russian perspective, to the extent that in theory Ukraine could block those supplies, turn them off, or siphon off the gas for its own purposes, or alternatively, Germany would find that for some reason, if it had an issue with Ukraine, Ukraine might not allow the gas to go through. So neither Germany nor Russia necessarily like having to transit their gas through Ukraine. But of course, Ukraine very much likes being in a position to use its transmission as leverage vis-a-vis both Russia and Germany. Nord Stream 2 is a potential answer to that. But given all the other geopolitical issues involved, including, of course, NATO's relationship with Germany and possible growing relationship with Ukraine, also the disputes that have arisen more recently in Belarus, this is actually a much bigger geopolitical issue now. And it does appear that Russia see it that way and that they are playing hardball. They are now playing hardball. They've gone to all this trouble to work with Germany to create this new transmission pipeline directly to Germany. And yet Germany's under tremendous pressure from NATO and specifically the United States to not allow this Nord Stream 2 pipeline to go ahead, because they're concerned it means that Ukraine will be in trouble, and also that Belarus potentially will become even more firmly ensconced in the Russian camp, although it seems to be pretty firmly ensconced already. So there you go. There's so much more to this, but the timing is curious. Winter is rapidly approaching. Northern Europe is due a very severe cold snap in about 1 week's time. Demand for gas will soar. And if it's not flowing, the price is going to absolutely explode. And that is a political issue now, right? Inflation is rising rapidly everywhere in Europe, and it's going to rise even more rapidly if gas prices move higher from here. And you also have the unstable political situation in Germany with a coalition government not having been formed from the last elections. There is so much at play here now. It is historic, actually. I think you can use that word.
Could you expand on some of that? When looking at Ukraine, because John, you have so much knowledge on the situation. It's something I don't have a foundation, a base of the history of the area, history of the relationships, nearly so deep as yours. Just taking a look at the Ukrainian side, so we do see now there's lots more tension where the Russians are saying, oh well, things are stirring up in Ukraine, we might have to sort them out, and then here we are in the UK and our armed forces saying, oh well, maybe we'll have to go into Ukraine to defend our allies, and all that. I mean, the timing there seems very, very odd to me, very, very suspicious, perhaps. What's the play here? What is it that's going on?
Well, again, I think on the one hand, Germany has had this energy dilemma for a long time. They're look, they are dependent on Russian gas. The question is, are they going to receive it directly, or are they going to allow other countries to transmit that gas? Selfishly, of course, Germany would love direct access because it means they then don't need to potentially cut special deals or do special favors for the transmitting countries. So Nord Stream 2 in principle is great for Germany, in principle. And it's also nice for Russia. Russia does not have particularly warm relations with Ukraine for reasons that, well, I mean, again, there's a lot of history here, okay? But the current Ukrainian government is the one that caused Russia to react pretty seriously to protect its naval lease in Sebastopol, right, in the Crimean Peninsula. And also this is all of it, a little bit covert, but everyone assumes they've been providing support to the breakaway regions of Luhansk and Donetsk in southeast Ukraine, which historically are ethnically Russian, and presumably did ask Russia for help. So it's not as if Russia was forcing them to accept that assistance. So look, there is a lot to play for here. Okay, but Ukraine is a modern creation. It was never historically a stable country in its own right. It was either part of the Austrian Empire, it was part of the Russian Empire, it was even briefly part, the southern part was briefly part of the Ottoman Empire, although that didn't last very long.
Right.
But and there was the Polish-Lithuanian Empire that controlled northern Ukraine. Look, there's no good border there. This is the problem, right? There's no natural border. Even the Dnieper River, which runs right through the middle of Ukraine, is not a particularly meaningful border. It's really quite, it doesn't, not in the same way certain other rivers create slightly better defined borders because they're in deep valleys or whatever it is. That's simply not the case here. And so it's been fought over forever. But the reality is that an awful lot of Russian gas comes out of the southern part of the country and logically passes through Ukraine on its way to Europe as a result of that. Nord Stream 2 is an effort to take gas being produced in more the northern parts of Russia and move that across the Baltic Sea to Germany. I mean, on paper, it all makes sense, but it stirs this historically volatile geopolitical pot. And there's just no dodging that issue.
Yeah, it does feel really, there's trouble ahead, the trouble's already here.
Trouble's
really.
already here. Yeah.
Really, and when you think of how gas is could, if the taps remain off, and it's definitely looking like they probably will be remaining off, it does feel like this is only going to stoke the inflation issue like crazy over the winter period. John, what do you think is what would you think is the likely outcome? And of course, I'm putting you on the spot here, but in terms of this sort of poker game, who would fold?
I think ultimately Germany will need to renegotiate. If behind closed doors, Germany will have to renegotiate its relationship with the EU and possibly its relationship with NATO. Again, these are historic things, but I just cannot imagine that as the most powerful, most productive, most prosperous member of the EU, and also most powerful, productive, prosperous member of NATO in continental Europe, right? I just can't believe that Germany is not going to allow Nord Stream 2 to go ahead. And if the EU and the US are objecting in some way, at some point, Germany will just say, sorry, we tried to be nice, but we need this gas. And if you're not going to allow us to renegotiate our relationship with the EU and with NATO, we will threaten to leave with all the associated political implications. If it does come to that sort of brinksmanship, I can't imagine that the EU would not give in, and NATO and the US would not give in. They would just say, okay, we have to accept that Germany has become a somewhat neutral power, as it were. And things would move forward from there, I believe, peacefully. But we may have to go through some brinksmanship to get there.
Damn! I mean, may you live in interesting times. Huh? That's it's quite the setup we have there, John. I mean, just looking more specifically to this event. So we have the German agency suspending the certification of Nord Stream 2. I mean, do you think that is as a result of NATO pressure? Do you think that's a result of other EU countries' pressure, or specifically American pressure on Germany for that? Because I don't see a scenario where Germany would decide that this is the thing to do right now.
Look, there is no logical reason why Germany itself would not want this gas. Don't get me wrong. I'm not saying Germany wants to be dependent on Russia for its energy, but the fact is Germans aren't stupid and they know they simply don't have other good options for reliable base power. Okay? They just don't.
Yep.
And it will take them years to build up a nuclear capacity or restart some coal generation I don't think they'll do that, but if they chose to go down that road to the point where it was meaningful, In the meantime, if Germany Inc. wants to remain prosperous, right, and and be the competitive, powerful exporting nation that they've pretty much always been, that is their only option. There is no other. And so basic logic dictates that they are going to try to get this sorted. The problem is external pressure. To the extent there's internal German pressure, okay, fine. There may be some minority, rabid anti-Russia crowd that is terrified of having any association with what they still see as a very undemocratic regime, to the east. But I don't think that they could possibly carry the day. I think it's the external pressure that's the real problem here. Germany's trying to thread a needle, and it is difficult. But ultimately, they're the ones in the middle, and they're the ones who will be willing to risk some brinksmanship to force that external pressure to back down and to let them proceed in some way.
Right. Looking over at the chat, we do have a comment from Hans, who says that the suspension of Nord Stream 2 is a domestic move in order to install the Green Party into the coming new government coalition. It's a very interesting observation. John, what would you make of that?
Well, see, there you go. And this goes back to what I said about the fact that we don't have a coalition formed yet. And indeed, there may well be maneuvering. As I said a moment ago, the maneuvering, however, is going to be by minority groups within the government, within Germany, rather than the general attitude of German industry, which desperately wants cheap energy to remain competitive in global exports. And so, yes, I absolutely believe there's a lot of maneuvering occurring amongst minority parties who may have their own selfish reasons for doing what they're doing and trying to hold up the pipeline. And yes, it could be related specifically to coalition forming maneuvering, as has been suggested. That may absolutely be part of it. Absolutely. And indeed, when it comes to the very, very niche specifics of this specific decision at this specific time, that may be the best explanation. But I think we can't lose sight of the bigger picture here. There are lots of interests involved, not just a couple narrow ones.
Sometime when all this blows over, somebody is going to make a great TV series about this with all manner of intrigue, though I think we'll have to just make do with the headlines for the moment. But John, it's just a fascinating situation, and it is great to hear from someone like you who has so much knowledge on the inner workings of how all this works. Now, looking over at the chat, we do have some plenty of comments here. We're looking over at some different topics. I do have a question from Jay here, which I find interesting. Maybe I don't know just how much knowledge you would have on the UK's refining capacity, John. But we have a question from Jay. Any thoughts on the UK becoming a centre for the production of sustainable aviation fuel? Any thoughts on that, John? It's probably a question I'd probably have for my friends working in the oil industry back in Aberdeen on just how good our refining capacity is. But considering the political favor there is for anything green, and of course the political desire to fly, I can certainly see it happening to some degree in the future. What would be your take on that?
Well, I'm not sure quite what is meant in this instance by sustainable aviation fuel. Now, I mean, as it stands today, the only practical aviation fuel is kerosene, really, right? And you've got to produce kerosene in a refinery, and the refinery is one that, as its intake, it will be taking in crude oil. And so to what extent crude oil is sustainable is not entirely clear to me. If what's meant by sustainable in this case
greener,
is that you're offsetting the associated carbon emissions, well, then there might well be a way to do that. That said, that will be expensive. And because, of course, having to offset something which is simply otherwise naturally occurring imposes an additional cost on that refining process. And I'm not quite sure what that would be in this case. But look, clearly the trend in this country, and it's true in many countries, is to try and find ways to make things at least appear sustainable and appear green, even if they're not. And I think when you look behind the curtain, a lot of these things are less sustainable and less green than their proponents claim they are. And there's an obvious reason for that, which is that's the trend. So look, I think I wish the UK well. I mean, in terms of trying to take advantage of Brexit, trying to be innovative in the energy market, facing its own energy challenges. Absolutely. So I wish Britain well, but I'm not sure that some of the current initiatives are all sustainable or sensible in their own right, and some of them might be outright misguided.
Right. Jay has clarified that he's referring to synthetic kerosene, which I believe is the creation he is alluding to of a man named Fisher Tropsch, which comes from sustainable feedstock. Now, Jay, I think this is probably a better question for our own energy specialist, James
Probably.
Allen, who loves his green energy and all manner of applications therein. Probably hold on to that for a future episode, because I'm sure James will be on back again. Looking further through the chat, we do have some questions regarding the current state of the stock market, which we've not really mentioned yet, which is funny, considering what we've been discussing so far. But Doug asks, "Hi Boaz and John, is there a simple explanation as to why both UK and US stocks are currently plummeting? Should Southbank investors either sell or sit tight?" Now, Doug, before we go into this question, Southbank does not have a house view. We have plenty of different editors here who have all manner of different investment views. So there isn't a broad recommendation we would give to Southbank investors generally. We let our readers listen to our editors' opinions and their own investment forecasts, and then make up their minds for themselves as to whether or not they want to follow them. And of course, Southbank Live, we do not give financial advice. This is for informational and hopefully entertainment purposes only. That said, we can discuss why both UK and US stocks are currently plummeting, as Doug would say. So, John, taking a look at the stock market, it has it's not been the best for certain stocks when we're looking at the UK and for the US. We have seen volatility pick up in the options market, the VIX index of late. What would be your take on to why UK-US stocks are having a bad time? Because interestingly, the US seems to be getting a bit hawkish with the whole tapering thing on when it comes to central bank money printing, whereas here in the UK, Andrew Bailey is actually all right to keep his foot on the gas and to keep things going, which is it's a bad thing really if you're a saver. Though I must say it wasn't unexpected when it came. Well, that's a double negative. I expected it that would be what the Bank of England would do. But looking at UK and US stocks, John, what's your take?
Well, let's think about where we started, okay? We started out with the US in particular being an extremely expensive stock market by any reasonable metric. Price-earning ratios, trailing price-earnings ratios, enterprise value to EBITDA, price-to-book ratios, price to sales. On any metric, and this is the important part, the only way in which you could explain away why those sorts of ratios were so high in historical terms was the low level of bond yields. And the only way you could explain the low level of bond yields was the fact that interest rates were still so low. And the only way you could explain why interest rates were still so low was because inflation expectations were still so low and the Fed wasn't concerned about it. Well, that horse has now left the barn, right? And the Fed, as you say, is clearly talking a more hawkish tone now, which they damn well better be. I mean, year-on-year CPI over 6%. So the stock market is extremely vulnerable now because inflation is not only elevated, but the central bank has recognized that it's elevated and is getting prepared to do something about it. Now, they may be miles behind the curve here, but the moment they do get moving, they'll be perhaps ever so slightly less behind the curve. And other factors equal, that should be negative for stock market valuations, especially given how stretched they were at the start of this process. Now, oddly enough, when you cross the Atlantic, what you find is that while the UK stock market is also expensive in a historical comparison along the sorts of ratios I mentioned, it's nowhere near as expensive as the US. And so there's almost a value case to be made with the UK stock market. And you can go one better. The UK stock market is also less heavy tech, which I believe is more vulnerable to this inflation-driven pressure. And it is more heavy basic industrials and mining, which is kind of where we started this conversation. Those are the sorts of firms that have very strong pricing power and are able to insulate themselves to some extent from the negative effects of inflation and interest rate increases on profits. So oddly enough, the UK looks like a bit of a safe haven here, given this, this mix of factors. So the UK may be the bigger market. It may be the one that has enjoyed generally higher valuations than the UK for a very long time. But that very long time was a long time characterized by very low interest rates and very low inflation. And we're coming out of that now. So the UK may be a good place to hide as a result of these factors.
That's interesting, John. Obviously, we're looking at a very sort of small timescale, really. So, of course, which way stock market moves over a short period of time, no one can really, really say for sure. Sometimes, unless there's something very obvious event or very obvious catalyst that provokes it. But on that note, why would you say that the UK stock market is having a hard time? Because as we already discussed, we're looking at the Bank of England not deciding to taper, not deciding to raise interest rates.
Boaz, everyone assumes that was just the last kind of chance to not raise rates, and the criticism on the bank following that decision has been so consistent. Everyone says, look, if you're going to have any credibility left, you have to start raising interest rates. This is getting silly now. And if you look at the behavior of sterling, the currency, it's kind of telling you that markets are looking through that one decision, and they do expect the bank to start tightening more or less in line with the United States, with the euro area. That's what's getting to be priced in now. So it was just 1 month. It was just a bit of an outlier. They had a chance. They chose not to take it. But pretty much everyone thinks a move is imminent. If not at the next meeting, then the meeting after that. I'm talking a little bit more bigger picture though here. The UK is starting from a slightly lower valuation level vis-a-vis the US, and the mix on the index is slightly more geared towards those industries that tend to suffer less compression, that is less multiple compression in their ratios when you get into this sort of environment. Yeah. So I do think the UK is likely to outperform the US market over the coming couple of years. I think that's quite likely. I think history suggests that's what's going to happen. Now, that doesn't mean prices go up. It just means that if to the extent they do go down, they go down by less than what's likely to happen in the US. And so the next question someone might ask is, well, hold on. If stocks in general are overvalued and they might trend lower over the next year or two, or at least not rise by much, if at all, what do you do? Well, again, you can overweight those sectors that do better in this sort of environment. And you can also expose yourself to the basic commodities themselves rather than their stocks. And that at least protects your pricing power, your purchasing power, because commodity prices, if you're concerned about inflation, commodity prices should continue to rise with inflation rather than decline in an inflationary environment. So that's another way to think about what's going on.
Yeah, it does seem, as we alluded to earlier, with London being the commodity capital, it generally would be good. Well, it's not good necessarily, but inflation isn't so much of a a phantom that will haunt the FTSE in the same way that inflation may when you're looking at some of the tech stocks over in the States. It's another one of these sort of transatlantic differences that we've got.
Tech is very vulnerable, and although the tech sector was relatively small in the 70s, as a component of the Dow Jones Index or Standard & Poor's Index in the US, for what it's worth, there are some old tech firms that were listed at the time, Hewlett-Packard, Texas Instruments, and so on, and they did poorly. They underperformed the broader stock market. And while tech is much more diverse today and much bigger today than it was back in the 70s, stagflation, that is an indication perhaps of what will happen again this time around. Unsexy, boring, basic industries getting metals, aggregates, oil, whatever it is out of the ground, or producing tobacco and cigarettes or basic foodstuffs or whatever. These may be the better performing stocks. I know they're horribly out of fashion, but in a way that leads for a good entry point. So this is where I'd be looking. I think I mentioned this briefly on our previous chat. It's bizarrely almost a time to invest in things people hate, as it were.
It is. It does seem like it does seem like when there's so many people who are trying to push people away from fossil fuels and from tobacco and weapons manufacturers, it does make inversely it makes a case towards buying these things because they're cheap. But John, just on that last bit, when you're looking at the Bank of England and then folding to peer pressure, it is kind of amusing when we've seen over the past decade all the time. It's whenever central bank says they're going to raise rates, everyone complains because this is going to wreck the stock market. This is really, really bad. And here we have the opposite, where we have a central bank saying we're not going to raise rates, and yet getting all this complaint. Does the Bank of England have to fold to that, though? Do you really think that they need to make sure that all these PhD economists who write articles for newspapers say that they've done a good job for them to do it?
Look, in theory, they're independent, and in theory, I suppose they should have a thick skin and not just give in to any pressure, be it political, public, or anything else. But look, they have an inflation target. It's 2%. They're over double that now, and the trend is clearly higher. Look at wholesale prices. Wholesale prices suggest that we're going to be, higher over the coming year. Also, you can create a simple model. I mean, I can do this on an envelope where you can predict the UK inflation rate by taking the US inflation rate and multiplying it by changes in the dollar sterling exchange rate. And that explains roughly 80% of the variation in UK inflation. And the US is at 6.2%, even though the UK is only around 4%. So, I mean, however you look at it, the Bank of England is going to be staring 6% plus inflation in the face in months.
Yep.
And when your target's 2%, and to still not raise rates, you're not going to have any credibility left. And so at some point, they're either going to have to lobby the government to change their target, or they're going to have to start raising rates, or they're going to have to resign. And I think I know which way it goes.
Yeah. Well, that's we've been waiting for inflation for so long, John. It's finally here. We don't want to ruin the party now that it's here. We don't want to scare it away. This really cool person has finally showed up here. We don't want to, we don't want to make a bad impression. I take what you're saying on board, definitely, John. I just wonder, as actually one of as Stephen comments, will any interest rate rises be meaningless, as they will be way behind the inflation rate? Stephen, I would definitely agree with that. I would say if I was the central bank, I'd be trying to raise interest rates a little bit to maintain my credibility, but always to make sure that I'm well behind the curve, so the inflation gets rid of all the debt that we've been worrying about for the past decade. Would you agree with that, John? Was that what you'd be doing?
I mean, they won't admit it, but I think that's the strategy. They're going to let inflation run hot. They will raise rates to save face and credibility to some extent, and they will let that run as long as they feel it needs to. They will hope that it helps to erode the accumulated debt in real terms, thereby deleveraging the economy, public and private. Whether or not that succeeds in rebalancing the economy to a more sustainable mix of debt and leverage vis-a-vis underlying growth potential remains to be seen. I'm not sure that's easily done. I know that the current economic mainstream and control of not just the Bank of England, but all major central banks claim it can be done that way. I'm very skeptical that will work, but they're going to try. And they'll try to do that. They won't admit that's what they're trying to do unless they're in one of their academic conferences, when, of course, they'll talk about it. But in official public statements, they won't admit they're deliberately allowing the purchasing power of our currency and our savings to decline in order to deleverage the system. That's a bad message, right? To say that they think it's somehow good that we find it more difficult to afford food and energy. I mean, that never goes over well.
Nope.
And indeed, assuming it doesn't work, let's say skeptics like me are right, that they failed to meaningfully deleverage the economy even over a multi-year period by doing this, and that inflation just remains elevated, and yet growth doesn't really pick up, stagflation, as it were. Ultimately, that becomes a very political issue, and ultimately, it will force the issue to try and change that sort of regime, that monetary regime, and indeed more broadly, change the way in which the government conducts economic policy generally, such as the tax code and all kinds of other things that impact households directly and increasingly severely in a stagflationary environment.
It's not a good time to be around unless you've got a lot of debt. Is a stagflationary environment.
Indeed.
That's for sure. Now, changing tack slightly, we're going onto Bitcoin at the moment. John asked, "Good evening. What happened to the exponential growth expected for Bitcoin after the Taproot run out or Taproot rollout?" So, John, good evening to you too. This is a very good question, I would say, because one of the big stories of the past week was that Taproot was successfully rolled out. Now, in the run-up to that last week, we did see a new all-time high for Bitcoin, and then the price fell afterwards. So I've been very vocal about my bullishness for Bitcoin with Taproot. I remain very bullish on Bitcoin because Taproot will increase its functionality, its utility. So it's already managed to get an awful lot of value, accumulated to it, and this is only going to make it more useful in the future. And that's one of the reasons why I'm very bullish on it. Similarly, I think because Taproot combines, it's a mix of different things, but one of the things it does is allow for greater privacy when using smart contracts with Bitcoin, and I think that's going to create a narrative around privacy, which is going to lead to another boom in the privacy coins, which have not been nearly so loved as some of the other cryptocurrencies out there. But that's on a much more speculative side. So, John, in answer to your question, I would say while Bitcoin has pulled back quite sharply over the past week, I remain quite bullish on it. As Christmas comes along, I am getting some sort of vibes of Christmas 2017 here. One should remember that during the past rollout of a big upgrade, which was segregated witness back in 2017, we did see a sell-off after it was announced. In fact, we saw plenty because the volatility was simply so high. But at the same time, it really was a very bullish catalyst for Bitcoin. So that would be my take on it. John, what's your take on Bitcoin over the past week? Because you're much more skeptical on the Bitcoin side than me, though of course you will definitely honor the Bitcoiners' arguments.
Yeah, look, I mean, Boaz, I think the simplest explanation is a market explanation: buy the rumor, sell the fact. I mean, to the effect or to the extent that Lightning is innovative, that Taproot is innovative, that these things make it easier to use Bitcoin, they make it less expensive to use Bitcoin, you'd think those would be positive. Okay, fine, but Bitcoin being a market with a price like anything else, it is subject to traditional market dynamics. And therefore, buy the rumor, sell the fact could be the simplest explanation here. And that's my best answer. Thinking more generally, though, about the future and whether Taproot will enable the Bitcoin price to get back into a meaningful uptrend following this modest correction, look, it's tough. The problem with Lightning, the problem with Taproot is not that they're not sensible sensible possible solutions to some of the issues that have arisen given the growth of the Bitcoin network and the costs that arise growing and maintaining that network. They are attempts to address that, but whether the sacrifices they make, that is to potentially create nodes of centralization within what is supposed to be, according to the abstract, the very first paragraph of Satoshi Nakamoto's original paper, a purely decentralized network, there's a cost benefit here. There's a cost benefit between decentralization and the cost thereof, and centralization and the cost thereof. And everyone has to make up their own mind in a way. Where they want to be on that cost benefit spectrum, and Lightning and Taproot are attempts to give you new spots along that spectrum on which you can operate.
Yep.
And so, okay, fine. Let's let the market evolve. Let's let these competing solutions duke it out, or to the extent they're complementary. I mean, that doesn't mean that they're 100% complementary. And so I think this is the way technology should evolve. And with respect to where we are currently in Bitcoin, I don't think anyone can still deny. For a while, some people were, but I don't think anyone can still deny that Bitcoin in its raw form as a medium of exchange is prohibitively expensive. I think pretty much everyone sees that now. I think everyone realizes there has got to be points of centralization on the blockchain if we're ever going to be able to use it in a cost-efficient way as a medium of exchange. So here we go. We've clearly moved on, and that's good. It's good that we've moved on. More power to these people trying to find a way forward. However, I have yet, in my own mind, to come to a resolution that the underlying problem is truly solvable. And by underlying problem in this case, I mean a truly decentralized and truly anonymous medium of exchange that can be practically used for acceptable cost, regardless of where you are in the world, et cetera, et cetera. I'm not yet convinced it's doable. I'd like to think it is, but I am skeptical. I remain unconvinced.
Well, let's hope we all give it a good enough try, because
Yes.
if it does arrive, it'll be bloody good indeed. On looking at once again, we're looking at stores of value, means of exchange. One thing I think is very interesting that we could dwell on a bit is while Bitcoin has had had a rough week after its new all-time high, gold is finally getting some of its luster back, and precious metals are finally getting a bit of love here, which I think is quite interesting. I think the Bitcoin guys and the gold guys often squabble a lot. I think they're quite complementary to each other, but it's interesting to see where you have this dynamic of Bitcoin going down, gold going up. I think another reason why Bitcoin may have gone down is because it plays a lot more on the bullishness in the equity market, which, as we've already discussed, has been having a rough time of late. Meanwhile, gold is finally, now that there's some fear in the stock market, it's finally getting its luster back. We do have a question here from Brendan asking, do you have a view on whether silver is a good investment as new tech seems to use it in components? So I think we can blend some of the answers here together, John. In fact, I've actually got a nice paperweight here, a nice 10-ounce bar of silver with Britannia on it. Got this one a little while ago. The Royal Mint have done some pretty good work with the design of Britannia on these bars. It's quite cool. But John, what's your take on precious metals here? Because it does feel like they're coming back in vogue.
Well, look, I was surprised that gold traded as badly as it did for most of this year. I thought it would get into an uptrend sooner, but I always qualified that view by saying that without some wobble in equity markets, gold might struggle to get into a meaningful uptrend, notwithstanding the low level of real interest rates. Well, here, we've had our wobble, and sure enough, gold's benefiting a bit, but it's still below where I would have expected it to be. So I think gold has a lot of catching up to do, and I think gold, according to my own simple set of models that I tend to use for this sort of thing, gold should already be around 2,000. And indeed, if the equity market continues to struggle and real interest rates remain very, very low as inflation remains elevated, gold should remain in an uptrend from there and has a potentially long way to go. It depends on how long we remain in this sort of environment. Now, that said, the silver comment's an interesting one. Silver remains cheap versus gold in a historical comparison. It's not as cheap as it was for a while back, but it's still, in a longer term chart, it still looks very inexpensive. And when you look at some of the developing uses for silver in biotech, infotech, solar, there are quite a few. The industrial demand for silver, I can only imagine, is going to remain in an uptrend going forward. And if the industrial demand remains in an uptrend and the monetary demand remains in an uptrend, because gold itself and the reasons for the precious metals to be in an uptrend are in place from a macroeconomic point of view, silver has more potential. Now, it is more volatile. It is riskier. Silver has 2 to 3 times the volatility of gold, which is particularly noticeable on the downside, sometimes on the upside, but it tends to be a bit asymmetric.
Yep.
And so it's not for the faint-hearted, but I think that silver ultimately from here is actually the better bet. And if one wanted to hold both, I would absolutely hold both. But I would definitely, versus whatever benchmark one thought was appropriate, I would be overweight silver here.
There's a very interesting report that was published from the Silver Institute over the past week. Similarly, on the looking at the green tech side and the industrial demand for silver, which made some observations on the use of silver in hydrogen energy, which I wasn't aware of. It was a very interesting report. For those interested, I believe it is free to get. You just need to take a look at the Silver Institute. It's effectively a lobbying group for the silver mining industry, where they're promoting the great things that silver can do for investors, for industrial fabricators, things like that. So if you are interested in that, do give it a look. We are getting a little bit on for time, John, and we haven't done our long short yet. So, which is the best part of the show, really. So we're leaving the best to last here. I thought it'd be good to ask what your long and short for the week is. For those who haven't watched the show before, long short segment is where we say what we're bullish and bearish on for the week, given something that's occurred over the past week. And this is not investment advice; it's just a bit of fun. And John, what would be your long for the week?
Well, it's related to what we just discussed, actually, because I do believe that there is catch-up potential now in the precious metals. And because I also believe that inflation is going to remain elevated for longer than many expect as a result of central banks remaining behind the curve. And the experience of the 1970s is an example for this mix of factors.
Yep.
You really want to be investing in the miners now, because that's where you get not only your exposure to the metal price, the precious metals price, which I think is depressed currently relative to where it should be, but you get your exposure to operational positive cash flow companies that have pricing power that rises with the rate of inflation. I think it's almost a perfect environment now for the precious metals mining firms, which have come off the lows. They suffered earlier this year. They have come off the lows a bit, but not by a lot. They look like good, deep value companies to me. And by that, I mean the mature miners, not the exploration firms. That said, if one wanted to have a diversified portfolio, that's great, but that would be my long. My short is another sector, and it's one I also mentioned. But when you look at valuations, okay, tech may have come off a bit, but
long way to go.
Oh my God. I mean, look, this is not a prediction. It's an observation. These valuations are still based on obscene growth projections. And to have those sorts of obscene growth projections in a world in which underlying growth is already weak and is weakening further, where you're going to have the complications of inflation sort of gumming up the works throughout the economy, I just think it just looks so stretched. And to me, this could fall so much farther. Seriously, big tech could fall so much farther from here and still look expensive. And so don't get me wrong, I think there's all kinds of promise out there for tech. Maybe it should still look expensive. But if they can lose a third of their value and still look expensive, if they can lose half their value and still look expensive, I'm going to get mean now. If they can lose 90% of their value and still look expensive vis-a-vis their actual sales, actual revenues, right? Where to begin or where to finish after that? I should probably shut up before I offend someone, but just seriously, people, look at these valuations and look at history and look at this set of macroeconomic circumstances and do your homework, because I think tech has a long way down potentially.
Certainly has some incredibly high valuations.
Yeah.
And
there's one company in particular I won't mention by name, but it starts with a T.
Oh, does it end with an A by any chance? Maybe. Yeah, it is. It's been a crazy time over the past 10 years, watching tech just go up and up and up and up past the point where so many people thought it could go. And every time it happens, someone tries to come up with a new way of explaining how it's actually completely normal for these companies to have these such high valuations. And I do wonder, when it eventually does turn, maybe it's now, maybe it's in a week, maybe it's in 5 years, who knows? When it does, yeah, and I don't think it'll take 5 years. Yeah, to clarify, though, I at the same time I couldn't tell you when it would happen either. But when it does turn, it will be an incredible ride downwards, and as tech has become such a large part of the stock market, that'll be felt by so many investors, including people who just have, just putting their money in tracker funds, or they're putting their money into, a diversified portfolio of tracker funds in their pension, things like that.
Well, this is especially true of those who are exposed to the U.S. stock market. You
Big time.
realize if you remove big tech from the U.S. stock market, the rest of the U.S. stock market does not look particularly expensive vis-a-vis the rest of the world.
Yep.
So it really, to the extent the U.S. does look super expensive, is largely driven by big tech's valuations being completely out of line with history.
Yeah. I think for my long and my short for this week, I am currently long. Well, I would say I am long Japanese children's toys. That's my long for the week, and the reason for that is the Japanese government are coming out with a load of stimulus checks. So similar to in America, where they give out. They just send you money in the mail. I mean, it's great. It's just in time for Christmas as well. It's great. They're doing this big fiscal spending plan all about stimulus packages, and they have done one of these already, right? But they're doing another one, and this time you get 100,000 yen if you're a household that has a kid that's if you have someone who's less than 18 in it. So you will get 100,000 yen, so that's about £650. If just because there's someone 18 or less living in it, it just makes me think. Well, them children's toys. I mean, somebody's going to be getting more toys at Christmas than they normally would have. Maybe £650 worth more of toys, or if they're teenagers, maybe they're 16, 17. I'd probably be quite long whatever cryptocurrency Japanese teenagers are really interested in, and because so many of the meme coins are Japanese dogs of some variety, so there could be Shiba Inus or Akita Inus. Maybe we're going to see some surge as a result. I don't know, but that would be my long for the short. I'd probably say the yen. So this comes back to an interesting sort of debacle where we've been talking about all of this inflation all over the Western world. And it seems like Japan is this enigma where the inflation it doesn't seem to be rising in the same way that it has everywhere else. So they're not seeing these such high figures as we are in elsewhere in the developed world. And we get this question from Alexander, who asks, how vulnerable is the Japanese equity market to inflation? And the interesting thing is, if there actually doesn't end up being inflation in Japan, it's an interesting question. So Japan has done this before, where they've sent money to people, and there was a rise in prices just after, and then the inflation wasn't sustained. And I wonder whether or not once again, Japan will confound everybody. And while inflation is raging everywhere else, in Japan, it's actually completely fine. It just seems like the kind of thing that might happen. So, but despite that, you're sending people 100,000 a year, 650 quid in the post. How can you be bullish on the currency when they're doing it? So I would say that's my long and short for the week. Just in terms of some closing remarks, folks, thank you all for tuning in. Looking at some of the last questions, we're not going to have a chance to look at all of these, I'm afraid. Though of course, we shall be doing more shows like this, so feel free to ask them again in the future. And we do have one on central bank digital currencies and whether or not that will unlock the next this century's tulip craze, which is interesting. That comes from Mark. That's a very good question. Whether or not the tulip craze isn't here yet, but it will arrive when the central bank digital currencies get, which I think is very bold thinking. I've got plenty of time for that. We also have further questions looking at the withholding tax on dividends. This sounds like something that maybe is not the most exciting topic. This comes from Olani, who asks, could you please explain further the withholding tax overseas on investments, which in this case has driven one of the largest companies in the world to leave its home. Royal Dutch Shell is no longer Dutch, really. There's another question we could expand on in future, and same platinum and palladium. This is platinum and palladium from Jerry. This is another thing that I'm very interested in, industrial metals. We could speak about this for a long period of time. Chris says Japan doesn't really do Christmas, so doubtful. Well, it's not just Japanese people in Japan, and at the same time, I am just borrowing the Christmas analogy as we've got going on here. whatever the case, you're getting 650 quid in the mail if you've got a kid that's 18 or under. Is going to be spent on it's probably going to be spent on some kind of consumer goods. But John, in terms of closing comments, we shall dwell on these topics suggested by our audience later on in a future show. Any closing comments you'd like to have now that we have gone on for episode 20?
Well, I do think we're in for an exciting winter. I think we're going to have events here in Europe that will be hopefully peaceful events, but ones that are seen as somewhat historic in terms of Europe shifting sort of alliances and the balance of power and things such as this, and the role that energy plays in that. And also, I believe that we're going to see this, not just the Bank of England, but eventually the European Central Bank. We are getting into a rate hiking cycle. You put all of this together, look, it's going to be a challenging investment environment. I just advise people to be cautious. I mean, it may be fascinating to watch, but it's one where a cautious approach to investing, I think, is warranted.
Certainly. They do say that it's an old Chinese curse that may you live in interesting times, but it's not actually true. It's been repeated so many times throughout history that everyone thinks it is actually an old Chinese proverb, but it doesn't actually true. But it is. It certainly has truth to it. Maybe live in interesting times is not necessarily a good thing. But that is all for this week. We can all dwell on that over the weekend. Thank you all for tuning in. That has been episode 20 of Southbank Live. It's been a great show. Plenty of user audience engagement, which is always good fun. Thank you all for tuning in. All of your questions, it's been great. John, thank you. It has been a great episode as ever.
My pleasure, Buzz. Until next time.
Until next time. We'll see you in the next episode, folks. With that, good night.